Good afternoon, investor and corporate. Welcome to Digital Roadshow Year's End 2024 Performance Review. This session will run about 45 minutes, including Q&A. Company will start the session by 30 minutes presentation, followed by 15-minute Q&A. During Q&A, investor may leave your question in meeting room chat box or use raise your hand function. We will open your microphone so you can ask the question to the company directly. May I now invite PTT Public Company Limited to start the presentation.
Good morning and welcome to Digital Roadshow for PTT for the year-end performance 2024 and also the Q4. So let us start with the key business highlight for this year. Starting with the upstream, for the hydrocarbon and power business, PTT preparing for the G1 project ramp up the national gas production to 800 MMSCFD on 20 March of 2024 to meet the energy needs of public and enhance the country energy security in the long term. PTT also acquired 10% stake in the Gacha concession in the UAE. The Gacha concession is the last gas field, some parts of which have already shown the petroleum potential and are under development. This concession is set to produce more than 1.5 billion standard cubic feet per day of natural gas before end of the 2028. PT LNG sold 50% of its share in PE LNG to EGAT, completing the sale of share to EGAT on 30 of April 2024. PT LNG and EGAT hold share in the PE LNG equally at the ratio of 50-50. PT LNG recognized gain on disposal of this asset around 4.3 billion baht from the asset sale to PE LNG, which help maximize the utilization of the country infrastructure and support the government policy of liberalizing the natural gas business. Additionally, it seeks opportunity for the future of cooperation and the joint investment. PT import total of 9.6 million tons of energy for both long-term and also the spot this year to meet the country energy demand. For the downstream, synergy value, emphasizing the importance of synergy within the P group to maximize the value. P group has been participating in the P1 projects since the October of the 2020, making the beginning of the enhancement competitiveness and sustainable goal for the group. By implementing the asset-backed trading strategy, the group leverages the potential of each company to utilize diverse assets to strengthen the country energy procurement. This increasing the potential for the value creation through the combined effort within the P group, leading to sustainable success. OR revisit and adjust its investment portfolio in the lifestyle business group to assess the suitability and make change in line with the current circumstances. It has considered easing the operation of the Texas Chicken and the Co-Inn. However, OR remains committed to seeking a new business opportunity and the partner that align with its goal and of becoming a leader of food and beverage industry. All refining within the PT group are capable of producing and distributing of the clean lower sulfur diesel fuels that meet the Euro 5 standard. This fuel have property that reduce sulfur content to below 10 ppm, helping to decrease the emission of the hydrocarbon and nitrogen oxide and reducing soot for the combustion engine. This in turn help to reduce the PM2.5 pollution as well. For the power business, there is an increasing in the electricity producing capacity of the PT group, approximately 5 GW. Mainly for the renewable energy sources, including the Avada Energy Private Limited, solar power plant project in India, GPC hold 42.93% of the share to the GRSC. The electricity production capacity increasing to 10.9 GW in 2024, which corresponding to 4.7 GW based on the shareholding proportion. Changfa offshore wind power plant project in Taiwan, GPC hold around 25% of the shares. The maximum installation electric production capacity will be 595 MW, which corresponds to 149 MW based on the shareholding proportion. PTT also expand investment in the 3 green offshore wind farm projects in Scotland. The UK holding indirectly around 25.5% of the shares. The project consists of 114 wind turbines with the total production capacity approximately 1.1 gigawatt. Equity portion will be 280 megawatt. It is the largest wind power plant in Scotland. The construction has been complete and it began commercial electricity production in October of 2023. For the achievement in terms of the non-hydrocarbon business, for the EV evolution, PT is currently reviewing its investment plan in the EV business. However, PT will focus on expanding the EV charging station in collaboration with the PTOR to enhance EV charging at the service station nationwide. By year 2024, PT Group will have the total of 2,911 EV chargers available. For the life science, Innovic Asia, a wholly owned subsidiary of the PTT, signed a share purchase agreement to divest its investment in the Avergen Malta, which engaged in the trading pharmaceutical and licensing, like in the Europe and other regions, to Foggy Holding, a company involved in the pharmaceutical and healthcare products. PTT recognized a profit approximately 4.5 billion baht for this divestment in the first quarter of 2024. For the logistics, PT focused exclusively on the business related to its core business and those existing with captive demand. It adheres to the asset-light principle and collaboration with a strong partner. The next page is our award and recognition. For the corporate award, we have applied by the Brand Finance that to be included in the World Top 100 Brand Guidance Index on 2025. And the only Thai CEO ranking number 66. We also ranked number 1 among Thailand leading company in Fortune Southeast Asia 500. We are one of the top 5 ranking among the top 50 most desirable employers. For sustainability award, we got the award from the ranking in the DJSI on the 13 consecutive years. And number 1 in terms of oil and gas upstream and integrated industry group. For the SET award, we also get the reward on the Innovation Company Award as well as the Sustainability Award. For the Finance Award, we got the recognition from the IAA, the 14 Institution Investor Cooperative Award, Asian Excellence Award, as well as the TMA Excellence Award in Finance. Next page, please. In terms of the PT Group strategy, since we have the new CEO coming in and we revised our vision to be the together sustainability for the Thailand and the world. So we try to ensuring energy security as well as promoting the growth with achieve the goal of reducing the GHG and GHG emission in the balanced manner. So the first initiative is the competitiveness enhancement for the existing business, with both for the hydrocarbon and power as well as the non-hydrocarbon business. For the hydrocarbon and power, we try to enhance our cost competitiveness. Starting from the upstream, E&P and gas business, we try to secure energy security for the country, as well as competitive supply and enhance our cost competitive. For the power, it will help in terms of the decarbonization for the PT Group, and we find the opportunity to grow, both in domestic and overseas as well. For the downstream, we now are doing the portfolio transformation. While PT will remain the controlling stake. For the non-hydrocarbon, we are now revisit our non-hydrocarbon business, and we will investment in that we have the competitive advantage and have a attractive and a right to pay. So if we are in terms of focusing in terms of growing in terms of the carbon business, hydrocarbon business, then it have to find the project to help in terms of offsetting the carbon that we release. So we are the study of the hydrogen and the CCS as we aim to target the net zero by year 2050. In terms of the sustainability, we try to integrate sustainability into our business strategy and the portfolio planning. And number 4 and number 5 is our endeavor and foundation that we try to introduce many projects for the operating excellence as well as the increasing the EBITDA uplift, and also try to think to enhance efficiency to the digital transformation. Next page. For the hydrocarbon business, starting from the upstream, in the upper part is our strategy, and in the green part is our progress. For the upstream, for the EP, they will try to secure additional competitive supply for the company and for the Thailand as well. For our gas business, we try to enhance our cost competitive and improve our efficiency. For the LNG, we try to create a new growth opportunity as streamline and synergize LNG value chain. So in progress for the last year and this year, that PTT then will accelerate the exploration and the development, expanding investment in the UAE and Algeria. For the gas BU, we try to support in terms of the policy and engage with the MOE and regulator for the competitive price and the competitive cost and the price structure. For LNG, we try to develop the group synergies in the LNG value chain. For the power, the main responsibility is maintain reliable for the group. As well as we will try to investment and expand our investment in the renewable. For the overseas, not only the performance that we will target to bring back, but also the strategy for them as well. For the downstream, we try to reshape our portfolio in the term of the P&R. And for the trading, we try to enhance competitiveness in our trading by implement the P1 as well as the D1, which is domestic projects. For the oil and retail, we try to be the Thailand majority partner, and we focus on asset-light portfolio and try to leverage our OR ecosystem and strengthen our market position. Next page, please. So for the non-hydrocarbon, as we now try to revisit our EV value chain, you will see the progress that now we are reducing in terms of the shareholding in the Horizon Plus from 60 to 40%. For other business, we now are revisiting, and we hopefully to see the progress within this year. For the logistics and infrastructure, we will focus on the captive logistics, such as a tank and terminal, and exit for other module. For the life science, we will be develop a self-funding strategy and action plan to explore and proceed on the potential option. Next page, please. This one shows the key initiative and to enhancing the EBITDA uplift. So for the short term, it's a quick win project that we try to enhance our performance by, the first one is the revisiting in terms of the hydrocarbon, as well as we try to introduce the D1 project, which is a domestic cooperation between our group, and also exploring the operational excellence, try to enhance our EBITDA uplift, as well as we try to enhance our efficiency by implement the digital transformation. In the midterm, you will see in terms of the more clear picture of the P&R portfolio, as well as we try to enhance in terms of the value, LNG value chain. We aim to have to be the LNG hub for the country. In the long term, as we are still growing in the CO2, so we have to find the projects such as CCS and hydrogen to be offsetting in terms of the carbon releasing. Next page is our key driver and also the key performance. If the Q1Q and the year 2024 compared to 2023, the crude oil and also the petrochemical that PT used for the reference in terms of the selling price in both olefin and aromatic, as well as the cost of the pool gas is reducing. In terms of the crude price in the Q4 is at $23.6 US per barrel, decreasing around 6% Q-on-Q. And if you compare year 2024 and year 2023, crude oil reduced around 3%, mainly from the concern of the demand growth according to the global economy, as well as the ceasefire of the Israel and Hamas, and also the increasing supply from the non-OPEC, especially for the USA, Canada, and Guyana. For the pool gas price in terms of the PTT in Q4 is around $7.8 US per MMBTU, which is reduced around 6% Q-on-Q, mainly from the decreasing price in terms of the Myanmar gas field. And if for the year 2024 compared to year 2023, reduced around 15%, mainly from the LNG import. That pricing is decreasing according to the spot LNG price that decreasing, as well as the import volume that reduced in this year. For the petrochemical, if the olefin that use HCP and aromatic for the PX, reducing around 3 and 5% Q1Q for the more supply in the market, and also the cost in terms of the naphtha that reducing, while the demand in terms of the downstream petrochemical still low. And if for the yearly on 2024 compared to 2023, the aromatics reduced around 4%, mainly from the increasing supply from the petrochemical plant in these regions open for the commercials. As for the olefin HDPE, reducing around 2% from the downstream demand still low. If you compare in terms of net income for this year, is around 90 billion compared to the last year around 112 billion. Still close to the last year performance. They have 4 main reasons. The first one, in terms of the upstream performance, can be offsetting with the pressure on the petrochemical spreads as the impact from the energy policy. Second is we try to manage operating expense as well as enhance the collaboration between the PT groups such as the P1 projects. We also try to balance the gain from the divestment as well as the impairment loss, and also we have effective financial management to deal with the effect volatility as well as the recognition of the bond buybacks. So in the detail, Kun Jelika will go in detail for use.
For the overall performance in the fourth quarter compared with the third quarter last year, you can see that our revenue dropped around 37 billion baht, or around 5% Q1Q, mainly from trading and P&R business because of the lower sales volume and average selling price following the global oil price. Also, the gas business revenue decreased mainly due to the supply and trading business from the lower average sales volume, lower average selling price following poor gas price, and also lower average selling price sold to industrial customers following the reference price. Moreover, gas separation plant business sales revenue also decreased from lower sales revenue, primarily from lower demand in propane and LPG, and lower average selling price. However, the oil business increased in revenue from higher average sales volume because of higher volume of transportation during high season, despite of lower global oil price. For the EBITDA, our EBITDA increased around 24 billion or 35% Q1Q, mainly from P&R business, where refining business performance increased due to lower stock loss in the fourth quarter. Additionally, the market GRM also increased, mainly from higher spread of most refined product prices over crude oil price. While petrochemical business performance decreased from lower product spreads. Oil and retail business EBITDA improved from higher average gross margin per liter of diesel and gasoline. However, the new business and sustainability business performance declined, mainly from the lower gross profit of PTT from pharmaceutical business following lower sales volume of lenalidomide compared with the previous quarter. For the net income, decreased around 7 billion or 43% Q1Q, mainly from loss on the FX, around 31 billion, mainly from higher unrealized loss on US dollar loans as a result of Thai baht depreciation in the fourth quarter 2024, while Thai baht appreciation in the third quarter last year. And also a loss on derivative increased 7 billion, mainly from higher loss on commodity derivatives of PTT International Trading in Singapore and also in London. However, in the fourth quarter, there was less loss on recognition of the non-recurring items. In fourth quarter last year, there was around 5.1 billion Thai baht loss, mainly from the provision and other expense for business restructuring of the Vencorex and PTTAC of GC, and also the profit sharing compensation of PTTGM. While in the third quarter, there was around 9.5 billion baht loss, mainly from the impairment loss on the asset of Vencorex GC, and also share of loss from PTTAC impairments. So let's see for the year-to-date performance. So our revenue decreased around 54 billion baht or 2% year-to-date, mainly from the trading business. Revenue decreased from the lower product selling price, despite higher sales volume, mainly from higher volume on the international trading of refined product and LNG. For the gas, our revenue declined mainly from S&T business, which resulting from the decrease in average selling price, according to pool gas price following the significant drop in spot LNG price. Also an adjustment of the margin S together with the lower average sales volume. While sale revenue of GSP business increased from higher sales volume and average selling price. Moreover, the TM business revenue increased following the higher pipeline reserve volume of GSP and also the power plant customers. Oil business sales revenue decreased from both average selling price and sales volume. However, E&P business increased in revenue as a result of higher average sales volume, primarily from the G1 ramp up, despite the lower average selling price. For EBITDA year-to-date, decreased around 30 billion or 7% from almost all business, as following details. The P&R dropped mainly from the low performance in refining business, mainly from the lower market GRM, following the lower spread of diesel, jet, and benzene price over crude, as well as higher stock loss. And also for the petchem, improved in EBITDA from both olefin and aromatic, from higher product spread in most products and higher sales volume. Gas business performance decreased mainly from GSP due to the higher cost according to the implementation of the single pool gas price policy, in spite of higher selling price and sales volume. While S&T and NGV performance improved due to lower gas costs following pool gas price, and also the TM business performance increased because of the higher pipeline reserve volume from higher demand. Oil business experienced a decline in performance from both lower average cost margin per liter and also the sales volume, mostly in diesel and gasoline. E&P EBITDA increased from higher sales revenue despite higher operating expense resulting from the higher maintenance activities. For the net income, decreased around 22 billion baht or around 20% year-to-date from a decrease in EBITDA, as I mentioned earlier, and also together with the higher loss on recognition of the non-recurring item. So in the 2024, there was loss on recognition of the NCI from share of loss from PTT AC impairment loss on asset of the Vencorex. Even though there are some gain on the disposal of AMOL, GM, and also the disposal of asset of PELNG. While in 2023, there was net gain on the recognition of the NCI, mainly from gain on divestment of the cash maple and also gain on change of status of investment and disposal of subsidiary of GC. Also lower gain on FX, around 7 billion, mainly from the realized portion, according to the appreciation of Thai baht, was lower in 2024 than that in 2023. Corporate income tax dropped around 14 billion, mainly from PTTEP's project in Thailand and Malaysia, due to the lower profits and also from lower performance of GC, Thai Oil, and PTT as well. Less loss on derivative around 6 billion, mainly due to the increasing gain on commodity derivatives of Thai Oil and also increasing gain on financial derivative of PTTEP. Okay, next slide is going to be the waterfall. If you can see, our net income decreased around 7 billion Q on Q, but if we remove extra item, the net income decreased around 11 billion or 44%. This is because of the margin, even margin increase around 4 billion, as according to what I mentioned earlier. But we have stock gain around 20 billion because lower stock loss in Q4, as the decrease in crude oil price in Q4 was less than that in the third quarter. Also, OPEC increased around 839 million baht, mainly from higher manpower expenses of PTT EP and PTT. DD&A decreased around 4 billion, mainly from lower sales volume and reserve revision upward from G1 project of PTT EP. Other income decreased around 4 billion because in the fourth quarter there was provision and other expense for business restructuring of the Vencorex and PTTAC of GC and profit sharing compensation of PTTGM. While in the third quarter there was loss on the write-off from divestment of Mexico block of PTEP and also the provision and other expenses for business restructuring of Vencorex and PTTAC. Loss around 7 billion, mainly from impairment loss of asset of Vencorex of GC in the third quarter, while in the fourth quarter there was impairment loss on investment in associates of IRPC and OR. For FX and derivative loss around 38 billion. So the higher FX loss mainly from the higher unrealized loss on the US dollar loan as the result of Thai baht depreciation in the fourth quarter. And also a lower derivative gain around 7 billion, mainly from the commodity derivative of PTT International Trading in Singapore and also in London. The share of profit in interest, corporate income tax, and also the NCI dropped around 5 million baht, mainly from higher share of profit from JV and associate in the fourth quarter, as PTTAC had impairment loss around 8.9 billion baht in the third quarter, but in the fourth quarter, there no such items. Also, and then for the year to date, if we exclude extra item, the net income will be around 94 billion, drop around 17 billion or 15% from last year, from the year 2023. So because of the margin drop around 17 billion, according to what I mentioned earlier in the earlier page. Also, together with the higher stock loss around 11 billion in 2024, because in 2024 there's like stock loss around 13 billion, but while in 2023 stock loss around 2 billion. OPEX increased around 2 billion, mainly from higher manpower expenses and also transportation expense. DD&A increased around 13 billion, mainly from PTTEP, around 10 billion from the G1 project, following higher sales volume, as well as Sortica and S1 projects from additional completed assets. Other income increased around 4 billion, mainly because of the 2024 PTTGM had gain on disposal of Adavo and also gain on disposal of asset of to PELNG of the PTT LNG. While in 2023, GC had gain on change in status of investment and gain on disposal of subsidiary of GC. Impairment increased around 4.5 billion, mainly because of in 2024 there was impairment loss on asset of the Vencorex, while in 2023 impairment loss on the Mozambique area of PTTEP. The FX and derivative gain decreased around 789 million baht. FX gain dropped around 7 billion from the lower realized gain on recognition of the receivables, cash, and US dollar deposits, as the appreciation of Thai baht in 2024 was less than that in 2023. Also, the derivative loss dropped around 6.2 billion, mainly due to less loss on commodity derivatives of Thai oil and less loss on financial derivative of PTTEP. The interest, the corporate income tax dropped around 14%, mainly from PTTEP project in Thailand and Malaysia due to the lower provision earlier, and also the NCI dropped around 19%. Next page, if you can see from our balance sheet, the financial position, we still have healthy financial position and strong credit rating at sovereign level. So our asset dropped mainly from trade receivables and other current assets decreased around 54 billion, mainly from the decrease in inventory due to lower sales volume and selling price. And also from the decrease in other current receivables. PPE dropped around 7 billion, mainly from the disposal of the LMTT2 assets of PTT LNG to PTE LNG. Also, other non-current asset increased around 37 billion, mainly from increase in long-term loan. And cash and short-term investment increased around 2 billion, primarily from the short-term investment in financial asset of PTT, Thai Oil, and also EP. The liability dropped around 54 billion, mainly due to the decrease in long-term loan from the repayment of loan and debenture of GC, PTT, and Thai Oil. Also gain from repurchase of the debenture around 4 billion in 2024. Equity increased around 32 billion, mainly from our group's net profits. And for the key financial ratio, you can see that both ratios still within our policy guideline. So the net debt to EBITDA, it dropped to 1.65 times because we have lower net debt more than the decrease in the EBITDA. Also, the net debt to equity decreased from 0.44 to 0.40 times because net debt decreased while equity increased. The dividend policy, next page. We have dividend payout ratio, like our policy have to pay dividend payout ratio not less than 25% of the net income from consolidated financial statements. And the consideration of the dividend payments taken into account of the investment plan, repayment schedule for loan, debenture or bonds, as well as other future needed and appropriateness, also the shareholder expectation. So PTT had dividend payment more than minimum policy the whole time. So average dividend payout since the IPO was 48%, and then the last 10 years was 66%. So and then this year last year we paid 2.1 Thai baht per share, which means payout ratio around 67%. And then the payment date will be on 29th of April.
Okay, so for the last page for the guidance, in terms of the economic and price outlook, GDP for the Thailand, we expect to be growth around, for the IMF, according to the IMF, expect to be around 2.9%. So normally the volume of the gas and also the oil will go along with the Thailand GDP as well. However, in terms of the price, we see that in terms of the gas price, it's really increasing for both Helicam and JKM, to be in less around 12 to 14 for the JKM. And for the oil price and petrochemical oil price will be softened compared to the last year's. Dubai price we expect to be in less around 71 to 81. And for the high-speed high-sulfur fuel oils also decrease around 5%. As well as the GIM, we expect to be in less around 3.8 to 4.8 US dollar per barrel. Whereas the petchem still have challenges in terms of the new capacity coming in and also the demand. We expect that HDPE and both for the olefin and aromatic will be softened compared to last year. For the business outlook on your right-hand side, for the upstream EP, we expect volume to be increasing from the Gulf of Thailand as well as other projects as well. In terms of the cost, they still can keep the competitive unit cost of production. However, for the selling price will be softened from the liquid that will be softened according to the Dubai price that will be softened compared to last year's. For our gas business, GSP utilization rate expected to be improved since we have more gas from the Gulf of Thailand, as well as for the pipeline and LNG terminal reserve volume will increasing according to the demand of gas as well. However, since the LNG spot market will be increasing, we expect a little bit higher in terms of the gas cost for the gas business. For the downstream, for the petchem, the petrochemical spread remain challenging from the supply but the strategic demand. However, the utilization rate expected to be increasing as we have the turnaround schedule less for this year compared to last year. In terms of refinery, we expect to be for GM softened as in terms of volume from the lower utilization rate. For the oil, we expect in terms of the volume will increasing go along with the Thailand GDP as well. For the power, demand in country will be increasing, and also the downward trend of the coal cost will help in terms of the feed cost for the power. For the life science, we expect strategic growth and in terms of sales volume and margin this year from the contribution of the Lotus Pharmaceutical.
This session has come to the end. Thank you very much, investor and corporate, for joining the conference. If you do need further detail, please feel free to drop us an email. Thank you. ขอบคุณครับ
Thank you.
Bye. See you next quarter.